The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN Tuesday morning, just after 9 a.m. Eastern Time. We got 24 minutes to go until the start of trading. You have S&Ps down about 0.5% right now. We were down to about 41.31 pre-market. We got some companies out with earnings. We get two big companies to kick off tech earnings tonight with Google and Microsoft. We'll take a look at them. We got Meta tomorrow. You have Amazon, Snapchat, NVIDIA, I believe on Thursday. Excuse me. S&Ps right now, negative territory. We got First Republic trading dramatically lower. We got some earnings from 3M. We got some news out from GM. GM with their numbers? Is that their numbers or just news? Yeah, that's their numbers as well. So GM up about $1. Let's jump around. Why not? 3M right now up a little bit as well. And you jump over to First Republic. It makes sense, man, right? The numbers are pretty stark. It's down over 25% right now. You're making new lows at 11.91. And who's doing business with First Republic right now? Why would you be doing it if you didn't need to? Seems like that's in the numbers. We'll get into it. NASDAQ 100, you're down by about 0.4%. Let's take a look at some of those companies as Google's out with their numbers after the bell. Could say the calm before the storm this morning. Microsoft shares down a little bit, but pretty much unchanged from where it was yesterday, 281.77. You're down about $1 to 280.80 right now for Microsoft shares. Now, Apple has their numbers May 4th, so they're actually the day after the Fed. Late to the party, Apple shares down a little bit today as well. You jump to the Dow off 85 points right now. Let's jump see how the banks are trading right now. Yeah, you're seeing a drop, man. Things more dire than they expected at First Republic. And you got some regional banks trading lower. You have JP Morgan down about a full $1 this morning. Bank of America shares, yeah, down about 30, 40 pennies this morning. Citi down a little bit this morning. Wells Fargo, I'm sure as well. Yeah, under $41. Crude down $1, 77.77. There you go. On the price of crude, you got the gold contract this morning up by $2. There's some volatility for you, man. Down to 1987, back above 2,000, just like that. We get back all the losses, and as I'm sure you can expect, when you get that type of action in the gold contract, you get some action in the dollar index. Dollar makes it to 102, just like that. We're back to 106 this morning. We see dollar strength. We jump over to the yield. The 10-year, how about it, man? Look at that acceleration, right? Up 22 ticks right now. You're talking about a 10-year at 3.42%. Quite a number, man. As we come into a big earnings season, we're already seeing it. We're seeing some cuts occurring at some companies. And let's jump into the numbers. 3M, they're going to cut 6,000 jobs in the CEO's latest move to blunt sliding sales. That's about 9% of their workforce. It's almost, 1 out of 11 employees is gone at that company. Maker of the masks, of course, among many others. The reduction, part of a wider restructuring plan to trim costs by as much as $900 million. And so they've now announced 8,500 total job cuts this year. That's about 10% of the workforce. And there's their revenue growth. Yeah, that's quite a number, man. Adds a declining trend, and they're probably looking to get ahead of it, cutting some costs in a big way. The results highlight how the maker of the Post-it notes, respirators, etc., trying to shake off weak demand for consumer goods across the board. Yeah, we'll see where we go, man. Remember, Procter & Gamble, man, they had some decent numbers. But you got to remember that the only reason they had decent numbers is because they were raising the prices 10% in back-to-back years. That'll put some decent numbers in your headline number. 3M, basically unchanged after trading up to 108.25 for 3M. We jump over to First Republic. So shares plunge as deposit revenue renews concerns. Yeah, I'd say so, man. How about they come in, okay? Executives laid out plans Monday for shoring up the firm. Of course they did, because they had to. After its first quarter results showed customer deposits plunged 41% to $104.5 billion. The market was looking for them to have almost $140 billion. and came even after the country's largest lenders parked $30 billion of their own cash, right? Think about that. So of the 104, $30 billion of the 104 is what came from the big bank rescue, where it was $5 billion from the big banks, JP Morgan, I think, Bank of America, maybe Citi. I think it was $2.5 billion from Morgan Stanley and Goldman Sachs. It's going to cut their workforce by 25%, lower outstanding loan balances, and curb other non-essential activities. I don't know where this one's going to end, man, because we've all seen it play out before, and I don't know who's doing business with this company when you're seeing that type of stuff. It seems like it's a race to the exit. Who's going to buy them? What are they going to buy them for? And why do you need to be around for that as a depositor in a bank like that? And that was discussed many times, and it seems like it's played out to fruition, and it's not going to stop once it starts. Not for that company. And the name at this point has almost been tarnished beyond repair, right? Because of the association with everything going on, because of probably what they have going on in their balance sheet, et cetera. And you just can't get out of that when you mismanage it that well, because basically everyone's figured out that if there's a run on the bank, you kind of don't have that money on day one to meet everyone's demand for their cash. And if that's the case, then it's a self-fulfilling prophecy, because the run starts, and why would it stop if you don't have the money for the last guy to get his money back? And that's where they kind of are right now. And look at that drop, man. Now let's jump over on the Analyze tab. How big of a move did they have? Check it out, though, right? What was the one-way expected move? 1 day expected move. $4.10. That's as of the close of yesterday. Do you know what it's down? $4.10. If you don't understand options, folks, we're going to be talking to our man Kevin Hincks after the break, and I may bring that one up, because that's something, man. When you look at, and what that's going to be, folks, okay, is going out to the April expiration. You want action to Friday, you're talking about a $5 move in either direction. Now, you could have chosen directionally correct negative, okay, but if you just were the one looking for a big move and you played both sides of that market, you got to go back to 16 to see, and you can see you had to pay about $2 on either side. So even being directionally correct, right, you had to get a $2 move to break even in that equity. And then you got a $4 move, but that was the expected move almost to the penny. Pretty remarkable how that plays out for First Republic. Yeah, but I'd be careful, because things seem much worse than they were supposed to be, okay? And meanwhile, you're not even at lows. You were just trading at $12.50 a week ago. Now we know that things are much more dire than we even thought. And meanwhile, you got all the way up to 16. And what are we going to do today? We're going to open right back under 12 bucks. You're going to open basically the lows of March 24th. And you're not even going to break the lows of where this thing was at during the craze of 1152. Even though the writing seems on the wall. They were supposed to have 140 billion. They have 100 billion barely. And of the 100 billion they have, 30 billion is from the big banks. So they really only have 70 billion. For what it's worth, I think it's been said. All right, back to the S&Ps. We've been taking a look at this channel line. It'd be interesting to see if this is where we got to bounce, man. You got well through it yesterday, kind of broke things apart, but I'd look for it, man. You get below this channel line again, and we have a tough week of tech earnings. Trying to think about where this market can go more and more. Maybe it's not, right, the quick slide. Maybe it's the company by company reporting that 41.38 becomes a little pricey. Margins are a little tough. We're going to come back. We're going to talk to our man Kevin Hincks. We're going to talk about McDonald's later in the program, though, because they're crushing it, and they're indicative of a tough economy right now in terms of people willing to pay at McDonald's for value. Stay tuned, folks. We'll come back with our man Kevin Hincks from TD Ameritrade Network. We'll be right back. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We have the S&P futures negative by about 19 points right now. That's almost 0.5% in the red. Let's jump over to our man Kevin Hincks from TD Ameritrade Network Fast Market right here at 12 noon Eastern Time every trading day, folks. They walk you through options. They walk you through hypothetical trade setups. You usually got 3 hypothetical trade setups a show. They walk you through it. All of them have defined risk. And, man, we got a big week of earnings coming up. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. I'm coming to you live from the Morningstar Conference at McCormick Place in Chicago. Oliver Rennick and I are doing shows. Tom White and I will do Fast Market live from this conference, Tommy, today. So having some fun here at the Morningstar Conference. But, Tommy, as you know, the pace of earnings is only picking up, and now we start to get to the big topics of the week, which is Microsoft, Google Alphabet. We're going to talk about digital ad spend. We're going to talk about cloud growth in Microsoft and Google Alphabet. That will lead to Amazon later in the week. So big topics coming up here. So many of these companies this week, Tommy, derive a lion's share, Meta included as well, derive a lion's share of their income from digital ad spend. And that has been weak and getting weaker in the last few quarters. You know, the markets are going to want to see some bottoming or some recovery in digital ad spend. So you can put Meta in there, Microsoft, Alphabet, Amazon, Snap, all these companies that derive income from advertising. They're all going to be on the table this week, and they're all going to move somewhat in unison. There may be some winners and losers in that group, but digital ad spend as a whole is going to be very important. And then how the cloud is growing. Is it continue to growing, or is it decelerating? Remember, decelerating growth is basically the same as bad growth. So that's going to be interesting as well. So a lot to go. Big, high-profile names this week, Tommy, and a lot of them. A third of the S&P, 34 names in the NASDAQ, 14, almost half of the Dow. We got a big week, Tommy.
Yeah, and it's pretty cool here. I put it, decelerating growth. Sometimes I see the numbers for some of those tech companies. Microsoft's Azure comes to mind, just some of those huge growth sectors of the cloud you're talking about. And, I'm ballparking, maybe they were growing at 42% and they're growing at 32%, and those companies get published, and I say, man, what a standard, right? Where they can be growing a multi-billion-dollar business by 20 to 30%. The market says we were pricing in 40%. So guess what, man? We're going to trade you lower. Pretty remarkable. What do you think of the action, Kevin, in yields this morning? We got some higher price in the yields on some of the numbers, the market action. We get some dollar movement, but we got lower yield on the 10-year right now, 3.43%. What do you think of that action?
I think of the news yesterday after the close out of First Republic Bank scared the markets a little bit. I think that number, their deposits falling 40%, tells the market that maybe some of this banking, there's still some residual effects of this banking crisis, Tommy. And I think that's why you're seeing a little bit of risk off today. I think that's why you're seeing yields lower.
And they could be an anomaly, man, because I was telling you, that name almost has such a toxicity almost has been discussed. And then after the numbers last night, you mentioned it, 100 billion plus, right around that, just over 100 billion. And 30 billion of that, Kevin, is the big banks that put that money in there. So it seems like the writing might be on the wall there. First Republic, I got it up on the Thinkorswim platform, down more than 25%. You know what's cool, Kevin? I had pulled this up. So it closed yesterday at 16 technically. I got it right now trading at $11.90. That's a $4.10 move. I jump over to the Analyze tab, and the market maker one-day expected move, $4.10 as of the close of yesterday. Pretty remarkable, the move priced into that equity, and it moved it, man, to negative prices. With that in mind, Kevin, I'm sure we got a few equities you may be discussing on Fast Market at 12 today. What are you guys talking about, man?
Yeah, we could easily cover 10 names today, Tommy, but we've picked out the big three. We're going to trade Microsoft in the first segment. Like Foley is going to come by and do a presentation on Chipotle, which is some of their strength, looking at Chipotle. And then we'll trade Boeing in the final segment. Remember, Boeing has earnings before the open tomorrow. So Really good day. Yesterday, we traded Google Alphabet ahead because, we've got so many names that we've got to pull some of them forward. So today, Microsoft, Chipotle, and Boeing, Tommy.
Three great choices, man. Microsoft, Chipotle, Boeing, three great equities, and we look forward to it, Kevin. We'll be watching at 12 o'clock today, man. Can't wait to talk to you tomorrow. Find out where the market is at that point. Have a great one, man.
Thanks for having me on, Tommy.
Always a pleasure. Folks, check it out. This is an outstanding week, man. It doesn't get any better than all the big tech stocks. They're going to walk you through hypothetical trade setups. You heard it. They talked about Google yesterday. They're talking about Microsoft. They're talking about Chipotle. They're talking about Boeing. We know the Microsoft deal, right? ChatGPT. We know Azure, the cloud, I mentioned it. Boy, they are benchmarked over some pretty high growth rates when you look at the numbers. And you do have to chuckle a little bit in terms of you got a multi-billion-dollar business. You're growing it by 20, 30, 40%. But guess what? When you're dealing with expectations, man, of growth over the next, 5, 10 years at staggering percentages, and that assumption begins to change, and you're only doing 20 or 30%, well, you go out a few years, and that is a massive difference in valuation. And that's why these companies can just really be volatile as they come out with the numbers. Advertising is going to be so interesting, man. It seems like the layoffs are mounting. 3M, right? I just mentioned it. 10% of their workforce for 3M they're going to be laying off. Companies are cutting. Quickest area you can cut on a slowing economy is ad spend. You're not firing anybody. You're not trimming your workforce, because what happens if you have to come back for those workers? That's been some of the hesitation, right? If you think you're going to need those workers in a year, you're going to do everything you can not to let them go, all right? Because we still have unemployment under 4%, folks. And when you're dealing with skilled workers, or where it's even more difficult in that aspect. So ad spend, going to be very difficult. But yeah, we know the story of Microsoft. I mean, quite a run to the start of the year for some of these tech companies. Chipotle, boy, that one, right? Quite a rocket ship as well. You talk about a buy, man. When you I got to back it up to the salmonella low, we'll call it. Okay, when this thing was at 279, you came into COVID well-positioned in terms of the ability to capitalize off of food delivery, right? All of that stuff up to 1958, quite the pullback, and they've recalibrated, and they're in a great spot. The one thing I will say about them, anecdotal customer feedback, it's expensive, man. I mean, it's not the healthiest stuff depending on how you manage it. You crush a burrito bowl, you could be crushing 1,000 calories, which is like almost half of your caloric intake that you're supposed to have. Yes, it's natural food. Meat has protein, rice has some good carbs in there, there's got some veggies, you mix some avocado in there, but you add all it together, you add the sour cream, you add the cheese, right? You add some ranch dressing, who knows what you can put in there. It's expensive is the real determining factor, especially ordering it on delivery. Now, what they have done, though, is that they are doing a great job of capitalizing in terms of delivery. Just windows, pickup windows, almost like Starbucks-esque. Do you remember when Starbucks didn't have a drive-thru? I can't remember the last time I went to a Starbucks right now without going to a drive-thru, right? That's where things are changing. And Chipotle has capitalized on that. They have some windows that are only available if you order online, okay? Right? Yeah, you can't even pull up and do a drive-thru. You need to order online, then get in the line. They're changing the way that we pick up fast food, and that is changing the way that things are going, in my opinion, because you see it with Starbucks, man. I'll be looking for a Starbucks sometimes. You're going around, and I'll say to myself, because I have Tommy in the car too. Think about it, right? I have a young 2-year-old, so it's not even just a luxury. Man, this is a real deal. You got kids in the car, okay, which a lot of people do hitting up Starbucks. You can't just roll up and jump in there. You can, okay, but that adds quite a rigmarole. So I find a place with a drive-thru. And nowadays, if a Starbucks doesn't have a drive-thru, there's only a few select ones left. That's a problem. All right, we'll take a look at Boeing. We'll come back from the market open, folks. Stay tuned. We'll be back in 3 minutes.
It's impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they're expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern, for free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open. You got the S&P down about 19 points right now. You got the NASDAQ 100 off about 70. Markets in the red. Crude off about 82 pennies. Let's jump around to the dollar index and to yields right now. We got some action. Dollar index at about 101.60. Now, if you haven't checked it out, folks, my dad, Tiger Tom, he's on Twitter. Check him out. He's out there tweeting 26 minutes ago. The dollar's off its lows this morning. You can expect this will bring selling pressure in the S&P 500. Hashtag dollar, hashtag S&P 500. He is under the name OBTiger777. OBTiger777. Search him on Twitter. Check him out. Follow him. He's out there tweeting. He's got 68 followers. He just kicked it off. And yeah, I think I'm one of those followers out there. Maybe I'll have to get out there tweeting as well. About time, right? Then we get on Twitter and put them out there. We have a TFNN Twitter account. We've always been, but maybe just the host putting out some of the rhetoric and the analysis, and we'll see. But there's the dollar index, man, off the lows from 102 to 106. Now, as that's moved, we've had some action in yields as well. The 10-year up a solid 20 ticks right now, and that's correlating to a 10-year that's negative by about 8 basis points, 8 pennies to 343 from about 351 to kick off the trading session right now. You got the 2-year down almost 11 basis points to 404 right now. I'll pull up CD rates later in the program, folks, because I don't think a lot of people are familiar enough with how high they actually are. Because what you do is you see the 10-year at 3.43, you see the 2-year at 4%, right? And if you're not familiar, you say, okay, the 2-year's at about 4%, the 10-year's at 3.4. You know, if I want to go 2 to 5 years out, I'm getting under 4%. You're not, because CD rates are above that level because banks are having to pay for them. You're approaching 4 to 5%, and it's going to stay there because there's pressure on the banks, and it's going to stay there for some time because they put themselves in a bad spot with how they manage their balance sheet as a financial institution. And First Republic paying the ultimate price, it looks like down 27% from where it was yesterday. Very difficult to imagine why you're finding a bid when things seem like they're on the path to zero on that equity. What are we talking about a company? What's it valued at this point? Still $2.1 billion business. That seems like it's a business based on banking deposits. And it seems like everybody with the banking deposits there is taking their money and running. Okay, let's see how Microsoft and Google are trading ahead of their numbers. So Microsoft, we're looking at down 0.8%, pushing the lows of yesterday. You do take a look at this thing longer term, though. Quite a rebound to start the year. This is one of the 7 stocks that has put about 90% of the gains into the S&P. You kick off the year at about 243. You trade all the way to 220. We're up $60 from the low of 219.35. Right now, trading at 279.24. We just kind of bounced off the highs we had in August, though. And just like the market, okay, we're back to basically the March lows. Right, I've been talking about on the S&P. It'd be pretty interesting that we bounce from the March lows originally when the Fed begins hiking. And what if that's the area we trade lower from when they end hiking? Right? When they pause a year later, that's when we accelerate lower. It would be ironic if that's how it played out. It would. You jump over to the Analyze tab. How big of a move are they looking for tonight? About $10 is the move that Microsoft is pricing in. You take a look if you want action through Friday. You're looking at about a $12 move. What's that, 4%? If you want action through Friday on Microsoft, about a $10 move. So about a 4 to 5% move expected just on the numbers tonight. We jump over to Google shares. Google, about a $5 move. Pretty similar. Almost a 5% move priced into their numbers. Excuse me, you want action through Friday. You're talking about $5.67. Now, I mentioned Meta is Wednesday, okay? So they're looking at about a $17 move. Check it out. You talk about volatility, okay? A lot more up in the air for Facebook shares on Wednesday. They're out with their numbers. If you want action through Friday, you're looking at about a $19 move, about a 9% move for Meta shares. You take a look at this pullback. $385 to $88. We're already above 209 right now. You're back to really where this thing first accelerated lower from that 300 drop back in January. You've pushed it to 209. Maybe you get up to the 618, 271. Where can this thing run? You know, the only thing is that, man, expectations are pretty high on this equity when you've just bounced from $88 to 209 as you come into the numbers, and you got about a 10% move priced into this equity if you're the one buying premium, which is quite a number. All right, we jump to Snapchat in terms of how big their numbers. Now, you talk about getting Max Payne situation, man. So first up, how much is this company valued at with what we're dealing with right now? $16 billion company currently is what this valued at. I ask because, is it feasible that they continue to do well when maybe if TikTok gets banned, but is that a business plan that you want to rely on? I mean, you've seen Facebook went from what, 385 to 84, and Facebook's nothing like Snapchat, all right? Snapchat went from 83 to 7, and it's still at $10. And they'd be one of the first one that might lose the advertising money. I pull up Snapchat sometimes, folks, and I kind of get TikTok. I used to use it occasionally. I don't like China being on my phone. I mean, that's the real deal. I'd probably play on it occasionally just to kind of see what's going on. But having that app on your phone opens you up to them just having all your data, and I'm just not cool with that. It's one thing giving it to Apple. That's bad enough, all right? Giving it to Microsoft, but giving it to the Chinese government, it's a step too far. But I can at least understand it sometimes. Snapchat, I just don't get. There's some things that get thrown in my face that maybe I get clickbaited into saying, oh, that's an interesting story. Let me check out what this influencer's up to, right? And the experience is horrible. Yeah, and let alone apps on that are just a nuisance to any degree versus Instagram and Facebook, where I think they are able to serve those ads in a much better way and get served. Snapchat, it's a tough deal, man. I know it's big with young kids, but boy, there's a lot of apps that are big with young kids. Discord is a huge one. We use Discord for the Tigers Den. Kids love Discord, man. It's free. You create your own, basically, server that you can invite friends to, create chat rooms, create sub-chat rooms, and young kids are on their phones. And so they create Discord servers. You have one, I have one. We create sub-rooms, etc. There's a lot of competition, man. Snapchat, you're talking about a move of about 15% for their numbers. And you jump over for the weekly. Yeah, about a 16% move. Pretty remarkable, right? I had to make sure I was saying it right. 16% move for their numbers. So what do we add? We had Facebook is at about 9% move for their numbers. Google and Microsoft, you're looking at about a 4 to 5% move priced in for their numbers. Snapchat, you're looking at about a 15% move priced in for their numbers. Is it NVIDIA that's out with their numbers, I believe, as well? Let's check it out. No, Intel? Yeah, Intel. Okay, Intel is out with their numbers on Thursday. Intel, Snapchat, and Amazon. Intel, what are we looking at? 7% move for Intel. Amazon shares out with their numbers on Thursday. About a 6% move for Amazon. So you see the big companies, 4 to 5%, Microsoft, Google, 6% for Amazon. Meta, you're looking at about 9%. You get into Snapchat, 15, 16%. That's important stuff to know if you're ever thinking about trading options. It's important even if you're just trading equities. I mean, if you're holding Snapchat, you better be okay with a 15% swing by the end of the week, man. That's the deal. Now, you just traded down almost, 2 full points for a $12 stock from where it was March 27th. These are weekly charts. But yeah, you better be able to withstand that type of volatility because you see it in First Republic. It moved right to the move, folks, and it's even dropping from there. Be careful, man, First Republic. I just take my $11 because who knows what happens with that equity, man. Stay tuned, folks. We'll be coming back. We'll go over some other equities that are moving this morning. We'll talk a little bit of McDonald's as well. Stay tuned.
Successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today, and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get the S&Ps right now, negative by about 17 points. We put it back on a 10-minute chart. And yeah, it'd be interesting. I get this lineup on my chart that goes from the highs of 41.98, then you touch the high last Wednesday, you touch the high as last Thursday, you actually touch the high last Friday. Then what we do is we get some bounces on there. So maybe that area of resistance turning into an area of support. The one thing I'll say is that is a 45-degree line almost? Does it tell me on here when I hit it? Let's see. Let's see if it gives me the grade. No, it's not giving. Sometimes I thought it gave me the actual angle. Nonetheless, that's going to lower prices, even if that does turn into an area of potential support as we bounce to lower territory, or maybe that's just the line that we oscillate around. That's the bear case, but we'll see. That's not going to be because of McDonald's, though. That's for sure, because McDonald's is going higher, man. Absolutely remarkable. The thing is flat. It gives back the gains. You see a lot of it priced in. Look at the run that McDonald's has been on. You just traded from 260 to almost 300 on this equity, let alone you were at 230 in October. That's staggering when you think about you're getting a dividend stock and you're up $70 in capital appreciation on a $230 equity. It's about a 30% rise from those lows in October. Now, the market's been rocking at that time, but boy, look at these numbers from McDonald's. Check it out. All three of McDonald's divisions reported same-store sales growth of 12.6%. Now, they're dealing with some great comps, man. There's not been an extreme McDonald's pullback. They pivoted pretty well during the pandemic even, right, to be on the apps, to have delivery, all of that stuff. And the numbers are across the board. So they beat on earnings, 2.63. They beat on revenue by more than $300 million. And that's only on 5.59, right? So you're talking about a 5% beat on revenue. Big numbers for a company like that. First quarter net income, $1.8 billion, up from $1.1. So revenue of $5.9 and net income of $1.8. That's how they line up. And sometimes it's not always the same, but net sales rising. In its home market here in the U.S., higher menu prices and increased traffic fueled same-store sales growth which topped the estimates of 7.9. Yeah, it jumps around a bit. Yeah. So they come in at almost 13% same-store sales across all three divisions. Just staggering numbers for McDonald's, man. And that's not going to stop, folks, because food prices in particular, if you have a family, I get it. The grocery bill is just insane right now. And you've heard Walmart talk about that you have higher-end shoppers doing shopping at Walmart, right? Why not? they have some good produce, folks. And if they don't, okay, you can find it somewhere else. But they got plenty of good groceries, the same ones you're buying in Publix and other grocery stores at a more expensive price. Even Target gets pretty pricey, man, these days, it feels like. Let's jump around to some of these stocks. Walmart and Target. Yeah, all these equities on quite a run, man. I mean, Walmart's up $23. Walmart's up almost 20% itself from where it was in October, from the run to 153. When are they out with their numbers? Okay, May 18th is when we get the retail Walmart. Yeah, Target the day before, and that usually means Home Depot and Lowe's are right around that time as well. Yeah, Home Depot May 16th. Whoops. And Lowe's the following week, May 23rd, as we get into some of those retails later in the earnings season. But this week, it's all about tech, man. Let's see how some of those equities are trading right now. Amazon with their numbers on Thursday. Okay, watch out. Why is Amazon giving back 1.3%, let alone the run it had up to yesterday? It's been quite a run for Amazon, man. Up almost 10% from where it was early Wednesday, 100 to 109.23. And just like that, we've given up almost $5 on the price of Amazon from where it was yesterday. Just mammoth numbers, man. $5 on Amazon. And you're talking about how many shares? 10 billion shares. That's a $50 billion haircut for a market cap of a company, almost a 5% market cap cut of a company that's valued at, what, $1 trillion almost, right? Just pulled it up. Yeah, over $1 trillion. And they lose 5% of the value in 24 hours. Yeah, here goes the market, man. S&P down 25, NASDAQ off 87. Let's jump back to the S&Ps. All right, we just broke below that kind of channel line, 41.34. Jump over the SPY real quick. Yeah, because that was the channel line. We got above it. Kind of a critical area. We did get below it by a whole point almost yesterday, right? You come into that area of 11.25. We're trading at 410 right now. Yeah. Let's see how the banks are trading. JP Morgan off a full percent right now. Bank of America off 1.5. Yeah, the banking deal's real, man. Citi off 1.5. Wells Fargo off 2.3. Yeah, who's keeping their money in First Republic, folks? Not happening. Okay, let's see what other stories we had up there. So we talked about McDonald's. What else we got? We got PepsiCo raises the outlook as quarterly results beat expectations. The numbers, $1.50 versus $1.39. Revenue, decent beat as well, 17.85 versus 17.22. Net sales rising 10.2%. Organic revenue rose 14% if you take out acquisitions and divestitures. Volume rose 1% in the beverage business and declined 3% in the food. They got big-time organic revenue growth. Full year 2023 organic revenue to increase 8%, up from 6%. Imagine those decent numbers. I hope they're decent numbers. Let's see. Yeah, decent numbers for Pepsi, up by 1.7% for their numbers. Let's see how some of the other equities. Oh boy, GM down 2.5%. They're not going to make the Chevy Bolt anymore. Interesting that they kind of started it all. Raises the profit outlook. Car buyers continue to splurge, is what they say. Well, maybe not so quick, man. I had another GM article, I believe, up here. Let's see. Alphabet. Okay, I'll have to find it. But they're not making the Chevy Bolt anymore. Interesting. That was one of the first big cars out there. Net income fell 19% to $2.4 billion. They had some buyouts for salary workers that hit that. Yeah. I mean, Tesla's got another price drop, I think, today as well. Yeah, check out that. Drops the Model Y starting price below the average U.S. vehicle. Tesla now is charging less for the cheapest version of the Model Y SUV than what a typical new vehicle sells for in the U.S. And yeah, he should taunt that online, folks. Under $47,000 for a Model Y, $759 less than the average amount paid for a car or truck in the U.S. And the differential between these figures has changed by more than 20 grand since the middle of last year. So he's making a play for volume, man. The Model Y was 18 grand above, and now they've trimmed it to that level. And that's a decent price for a car, man. I was talking about earlier, we were talking about in the den, that the Kia Telluride, and there was some feedback about Kia, right? Maybe it's not the best vehicle, was what some said. You can feel the bumps, etc. That's obviously going to be the case when you're going towards the lower end versus the higher end. But dollar for dollar, man, getting a solid SUV for like 45 grand in that level, it's just such value when you go to the top end. And now cars that are amazing vehicles, okay, but 100 grand, like nothing you're spending for some of those, whether it's Yukon Denali, Chevy. Stay tuned, folks. We'll finish the car conversation. We'll take a look at Tesla when we get back. Stay tuned.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got GM on their numbers down 2.3% right now. Ford down 1.1%. You get the market down. You got Tesla on their price cut down 1.3%. Pretty amusing. I did actually find myself checking out the Model Y. So they call it an SUV, I guess. Model Y. Is that what they call an SUV? I guess they do. Maybe because it's a hatchback, right? That they compare it to, isn't that what they just call it? Right? Yeah, Model Y SUV. That seems like a loose interpretation of an SUV to me in terms of what it looks like. That looks like a hatchback, if not a sedan. But I understand, I guess, if the top opens, the hatchback is what it is. But check out 46.9. And then what you get, though, is you get the $7,500 tax credit. Again, I don't think I'm going to be buying one. Not a fan of Tesla. I mean, even just the quality and some of the videos I watch of the AI, and it's tough when you can't even tell the truth in terms of what the car can do or what it can't do, because Elon says it can do everything, right? So there's this whole mix there. But you're talking about 47 grand. You take off the 7,500. You know, the estimated 6-year gas savings, yeah, that's a promotional number that I wouldn't really be calculating, but you're still talking about under 40 grand when you add in the credit for a brand new Tesla that was much more expensive about 6 months ago. So that's a real number, man, as they're going to play out. Now, jumping to Meta shares, this last one I wanted to talk about. Meta needs a new catalyst after the stock 77% rally. Be careful, folks, because these stocks have rebounded nicely. Expectations are high, and I imagine advertising in particular is going to be a problem, and we're going to get the first glimpse of that today on Google numbers. And if Googles are bad, Metas are going to be bad, and Snapchats are going to be abysmal, okay? You want to finish off the program with one chart? How about this one? Meta Platforms' annual sales growth. Facebook's annual sales growth, okay? Quite a spike in 2021. Check out 2022. And you know the rebound we've had, okay? Things are going to be tough in advertising, man. That's the first money that gets pulled. It's easy money that can get pulled. And we're going to get a glimpse of it today for the first time. And with that, we got Meta shares off 1.7% right now, ahead of those numbers. And folks, Basil Chapman's up next. There he is on the front page at TFNN. He's got a webinar a week from tomorrow. That's Fed Day. Go sign up for the opening call. You can do it ahead of Basil's program. You got a money-back guarantee. You get his newsletter. You get the webinar a week from Wednesday. Have a great one, folks. Stay tuned for Basil. We'll talk to you tomorrow.